Hi guys, welcome to Options Advantage. All right guys, welcome to the show. My name is Masi from Masi Trades. So what I'm going to do, this is the Options Advantage show with Benzinga, and what we're going to do here is we're going to go through all things options. So Monday, Wednesday, and Fridays, I'll be on with you guys. I'll go through my watch list, market movers, specific trade ideas, and then obviously we'll go through in-depth options, the basics, and then move on towards obviously more advanced strategies, credit spreads, buying naked calls, puts. So we're going to go through all that here, and I'm really excited to start with you guys. So let's start with what's going on today. So there was a couple of obviously headlines today, so I'm going to go through that first with you guys. Money work. All right, so my first so the first thing that I had on watch today was really big news with Nvidia and NIO. So if some of you have heard, Nvidia and NIO have partnered up to create an automated self-driving, obviously, vehicle, an electric vehicle. Since the EV industry has been taking off over the past year, I would say a lot of companies have been trying to get their foot into the door of the EV sector, obviously with Tesla in there already, NIO up and coming in China. We have Apple news that they want to get into the EV sector. Baidu recently is partnering with Volvo in China to kind of get their foot in the door with the EV sector. And now Nvidia is partnering with NIO. They're going to be utilizing Nvidia's Orin processors to obviously implement into their EV and electric vehicles. So really exciting news there. We'll go through Nvidia's chart today, and I'll show you guys how it moved off of that news. Also, in other news, we had Roku. So Roku was in talks last week of purchasing Quibi's content. They finalized that, so they will be purchasing Quibi's content, their streaming content. So Quibi, if you guys don't know, was a streamer as well, a streaming service as well that didn't really take off too much. They didn't really go mainstream, obviously, like Roku, Netflix, Amazon Prime, all of these ones. So Roku has decided to purchase it and take over their content. This is really good, obviously, news for Roku to have more valuable content on their streaming service. It'll kind of have them in competition with some of the bigger streaming services such as Netflix, Amazon Prime. So really like the news behind Roku. They also have multiple price target increases on them over the past week. I know recently a Citigroup analyst increased their price target from $375 to I believe around $460. So Roku looks really good too. It moved as well. So we'll go through that as well with you guys. So I'm going to share my screen and just show you guys these two. All right. So on the left side, we have here Roku. So this is Roku's, and I'm going to actually just give you guys Roku for right now. This is Roku's 5-day, 5-minute chart here. So you can see Roku has been on a steady uptrend over the past week or so. I believe last week, the beginning of the week, was when it announced that it was going to purchase Quibi's content. So ever since then, you can see based off of that catalyst, Roku has been on a strong uptrend here. Consistent, healthy uptrend, because you do see that it has some pullbacks around those key levels, psychological levels. And then obviously, Roku currently is at all-time highs. So if you're looking to trade Roku, just pay attention to that. It is currently at all-time highs. We can see Roku going to those psychological numbers. So what I mean by psychological numbers is you'll see sometimes stocks will move to those whole number targets. So 400, 450, 300. These are psych levels. So whenever a stock tends to move towards those levels, it starts to pull back around those levels, and it's getting around that 420, 450. And if you pay attention to Roku's options chain, you can see that Roku has a lot of volume here. You can see the volume on its options chain, and a lot of open interest. What I like to look for is kind of anomalies in the options chain. So you can see right here on the 500 strike, or I'm sorry, 450 strike, there's a lot of volume. And then on the 455 strike, we have a lot of open interest as well. So we can definitely see Roku continue this uptrend. As long as obviously this news, more price target increases, I definitely see Roku's uptrend healthy and continuing probably to 450 at least over the next couple of weeks. So we'll continue to watch Roku based off of that news. So you can see here, healthy uptrend. It's starting to pull back today. Overall market news. Overall market sentiment today was down, but it did pump in the beginning of the day. So you can see here, Roku was on a steady uptrend in the beginning of the day. Right now, obviously during the 11 o'clock to 12 o'clock, 1 o'clock hour, market tends to slow down. Roku's still holding its VWAP here. So if it bounces and it continues to hold this VWAP, we can see Roku continue on the upside later today or even after hours into tomorrow. So as long as it's holding this 408 level, this VWAP level right here, we can definitely see Roku continue on the upside. So very healthy trend on Roku, healthy uptrend. We'll keep this on watch. Now, on the other hand, we have Nvidia. So as you can see, Nvidia also moved today, but I want to show you guys something on Nvidia. So Nvidia has been kind of in a range for a while, and I think that this news that has come out on Nvidia and NIO is really, really going to be a strong catalyst for Nvidia to kind of push it out of this range. So you can see on the 4-hour chart, it was ranging between kind of this 547 level and around, I want to say this level right here. So if I were to put a little price target here, probably around 507, I would say. So you can see that it's just been ranging around those two levels, not really able to break on the upside or downside for a strong uptrend or downtrend. But right here, you can see today started to break that 547 level. And now potentially we could see a strong uptrend on Nvidia based off of this news. Obviously, the EV sector is rallying with the obviously new president-elect inauguration. They are pushing for a lot of electric vehicles, obviously pushing for that. So we could see a lot of movement and a lot of shifts into the EV sector, into the EV industry. So we'll be keeping all of the obviously EV sector on watch for the next several months, because we could see a lot of movement in that sector, and Nvidia is going to be a part of it as well, on top of all of the graphic news and chip cards that it's been coming out with. I think Nvidia has a lot of potential to the upside over the next several months. So we'll be keeping it. And you guys can see here on Nvidia today, this is the 5-minute chart on Nvidia today. Had a nice little uptrend here, started consolidating, starting to trend again, but it's still holding that 547 level. Remember, we broke out of that 547 level range on the 4-hour chart. It's holding above that 547 level. As long as it holds that 547, I definitely think we could see more upside potential to Nvidia as well. So we'll keep this on watch for today. Definitely above 560. I see a strong level of resistance at 560 on Nvidia. So if we can see it above 560, would be a nice entry for calls as well. So that is the market today. So let's move on to, those are the market movers today. I always want to go through that with you guys, give you some trade ideas and what I'm looking at obviously throughout the day and what has moved, just so we can recap the day. And then now we're going to go into some options learning with you guys. Okay, so obviously options has become really popular over the past couple of years, I want to say, with newer traders that have come in. And I'm going to go through obviously the differences between options trading and stocks trading first, so you guys can kind of understand, and then we'll move forward from there. So basically, when you're trading options, what you're doing is you're not buying when you're trading stocks, so if you're trading equities, you're buying a percentage of the company. So you're buying a stake in the company, versus when you're trading options, you don't necessarily own a part of that company at all. You're not buying ownership into that company. What you're actually doing is you're buying a contract on that stock that's going to give you the right, but not the obligation, to buy or sell that stock. So the underlying asset is the stock that you're buying. So if you buy a contract on the stock, that is just giving you the right to buy or sell the shares on that stock, versus obviously buying the shares, you're buying a percentage of you're buying into a percentage of the company. So you're invested into the company versus buying a contract. Now, with options trading, what happens is one contract. So if you were to buy one contract, say on Nvidia, one contract that you buy is worth 100 shares of that underlying asset. So if I bought one contract on Nvidia, what that means is that I'm buying the right to buy or sell 100 shares of Nvidia. So pretty much you have 100 shares of whatever stock that you bought that contract on in your possession. So what that means, so for example, if you were to buy 20 contracts on one stock, that means you have 2,000 shares of that stock, because one contract is obviously worth 100, you multiply it, so you have 2,000 shares. You risk the amount you pay for the contract. So what that means is if you buy a contract that is worth, say, for example, you buy a contract, your position is $200. The max loss that you can take is $200. You cannot lose more than that $200 that you invested into the contract. So that's the good thing about options trading. You have that max loss. You know exactly what you're going to lose if, for example, obviously the trade doesn't go your way. And then obviously, each contract has a expiration date. So when you're purchasing a contract, each contract has an expiration date. So for example, there are weekly contracts, there are monthly contracts, and there are leaps. Leaps are contracts that are further out, for example, more than a year. You're betting long-term on the company that obviously you're buying the contract on, versus if you buy weeklies, you're most likely day trading the stock, or you're scalping monthlies, you're most likely swinging the stock. So make sure that you understand that every contract has an expiration date, and the stock has to hit your strike price. It has an expiration date and a strike price. And we'll go through, obviously, strike prices is a really, really complicated concept. So we'll go through that in the next episodes. But just make sure that you understand that each contract has an expiration date and each contract has a strike price. And both of those really have a lot of impact on how you get paid out if the stock ends up going in your direction or if it doesn't. So make sure that you pay attention to that. And then for each contract, you have to pay a premium price. So obviously, when you're buying shares, you're buying the price that the stock is currently at. So if you're buying shares on Nvidia is currently at around $550. One share on Nvidia would be $550. Versus if you're buying a contract, each contract is priced differently, dependent on a lot of different factors. So what you're paying is that premium price on the contract. So the premium can be priced at any price. Obviously, some stocks have higher premium prices depending on a lot of different things: implied volatility, the strike that you selected, the expiration date that you have, the volume on the stock. There's a lot of factors that go into how the premium price is calculated on that contract that you buy. So make sure that you're paying attention to that. So you're pretty much paying that premium price for one contract. So say, for example, you want to buy a weekly call contract on Nvidia, and the premium price is $5 on a specific strike that you want. You're paying that $5 for one contract. So what would happen is how it would work, since it's 100 shares, you multiply 5 by 100, and then you multiply that by the number of contracts that you buy, and that will give you your total purchase of the obviously the what's the word that I'm looking for? The position that you're in. So that'll give you your total position in that stock. So another thing that I just want to say is that American contracts can be exercised anytime before the expiration date, and European contracts have to be exercised on the expiration date. So what that means, what the exercise means, is if your contract is in the money, which we'll go through later. I know I'm getting a little bit ahead here, but what it pretty much means is that if your contract is in the money, you can exercise it. So what that means, when you exercise the contract, if it's getting close to your expiration date and you still believe that the stock is going to head in the direction that you want it to, for example, if you buy call contracts, what you can do is, if you exercise the contract that you have, you be buying the shares of that stock. So if you, for example, buy 2 contracts on Nvidia, you're going to buy the 200 shares if you were to exercise that contract. So that's another kind of strategy that some people utilize as well. Now, so obviously there's a lot of differences between options and options trading and trading shares, and people kind of want to know why and what's so interesting about options versus trading shares. So we can go into that as well, and I'll give you guys details on why you guys want to trade options and what are the benefits of trading options versus just trading the stock. So pretty much it's cost efficient. So you can really utilize a very small account and trade a decent amount when you're trading options. That's why I recommend options trading for a lot of newer traders. It is a little bit more risky when you're trading options because there's a lot of volatility, a lot of things go into how your premium is priced. Like I said before, it's not just how the stock is moving up or down. There's a lot of things that go into it, a lot of in-depth details, the Greeks, implied volatility, volume. All of this is going to go into how your contract premium price moves and how it's priced. However, because it's cost efficient, you can buy the same, you can enter the same position as you can enter the same options position as a stock position, but at a lower cost. So what I mean by that is, if you were to purchase 100 shares of a stock that's currently at $100, you would have to put up $10,000 to purchase 100 shares. Versus if you were to purchase one contract on that same stock, one contract is 100 shares on the stock, and say the premium price is $20, you would only be paying $2,000 for that one contract that's worth 100 shares. So same position, a lot less invested, a lot less risk exposure. And I think that's why people are so much more interested in options. And that's what kind of interested me in options as well, because I didn't have to put a lot of risk on the table with the same amount of reward, if not more. So with options trading, you're most likely going to get a higher percentage ROI, if not the same ROI, with a lot less obviously risk exposure on your end. So your ROI is going to always be greater, obviously, if you're investing 10,000 versus if you're investing 2,000 into that specific trade that you have. So these are all kind of pros of trading options. The only downside of trading options, like I said, it is a little bit riskier than just buying the shares because of how premium prices kind of fluctuate over the day or over the week. So that's the one thing that you want to make sure that you're paying attention to, is how your premium is being priced. But overall, I think options is a great way to get into the trading world. And once you really learn the nitty gritty, it becomes a lot easier, and it's so much easier than trading shares. So I always recommend people that are getting into trading to really look into options and kind of learn about options, because it gives you a lot of options. So make sure you pay attention to all of these things. These are just the basics. Like I said, over the next several weeks, we'll get into more in-depth trading strategies and options and breaking it down. So that being said, I'm going to give you guys some time to ask any questions you guys have, or any tickers that you guys would like me to look at. So does anyone have any ticker symbols, any stock ideas that they just want me to kind of look at or review?
So I'll help you out with this one. We got VVPR. If you could check that one out, from Romeo Dapper.
Let's take a look. I'm gonna open this on VVPR. Okay, Vivo Power International. I've actually never traded this stock, but let's take a look. I always like to look at the higher time frames first and then work my way down. So on the weekly time frame, we do see a little bit of consolidation here. You can see it did run up to about 24 and then came back down. So the stock looks like it's just consolidating around this area right now. Probably want to see a breakout of around $12 for more upside potential. After the $12 mark, it does look like it has some wicks to fill up here, and it does have some room all the way up to about the $15 mark here on the weekly time frame. Yeah, on the yearly time frame, you can see it even better. So the daily one, you can see that it is consolidating between this probably $6 range and $12 range here. If it can break out of that $12 range, definitely see some upside here. It has a little bit of a gap here to fill to $14, and then some room all the way up to $15, $16. So definitely room here, but it needs to hold above that $12 level. In my opinion, definitely is just kind of consolidating right now. But it could show some upside if it holds on the $12 level.
Perfect. Let's go ahead and check out this other one that's really popular right now. It's CLSK.
CLSK.
Brought to us by Kenny Mejia.
All right, so CLSK. So, like I said, I always start on the weekly time frame. Not a lot going on the weekly time frame. Does look like it's starting an uptrend here. Slowly did have kind of a support at $10. Probably about $7 here, and it's starting to break off of that support level. Let's see what it looks like on the daily time frame. So on the daily time frame, it does look like it's been on an uptrend, slowly pulled back here. It pulled back nicely here. What we can see happen now is I'm actually going to change this to a 50-day, because on the higher time frames, you want to look at these are my moving averages. So they're my EMAs, my exponential moving averages, and I like to look at these when I'm looking for trends on the stock. It's really helpful to see the trend on the stock. If you're looking at it on a higher time frame, you obviously want to see. So I'm going to do 150 days. You can see that it's trending above its EMAs. So whenever a stock is trending above the EMAs, it just means that the uptrend is going to continue really high above the 50 and 100-day EMA. What could happen here is the stock will pull back to the previous level of resistance, probably around $30. You can see, because the stock was on an uptrend here, kind of created a level of resistance around $30, $30.50 probably. And what will happen is we can see the stock, if it does come back down, will retest $30 and then continue on the upside. I just want to see it on a smaller time frame. Yeah, so you can see that it did try to come and retest this $30 level on the 30-minute time frame. So this is a 30-minute time frame. And what we can see now is stock could continue upwards after it obviously tried to retest this lower.
All right, so now we got a great question here. We're starting to finally get some options questions at the end of the day, guys. This is Options Advantage, so let us know what kind of options education you guys want to hear about. So let's go into this one. What would you say about deep in the money? You can go ahead and read the question out. So what would you say about deep in the money leap options?
So in the money leap options is, leaps are kind of tricky. So when you're buying leaps, you're obviously betting on the stock long term, whether on the downside or on the upside. So whenever you buy further out expirations, I always recommend buying out of the money. So you obviously want to buy when the stock, what you think the stock is going to hit. So for example, if the stock is currently trading at $500, I don't recommend buying really deep in the money leaps. What you need to do is buy a little bit further out expiration, further out of the money contracts, because that's what you think the stock is going to hit. So I wouldn't buy in the money. I've never bought in the money leaps. I have bought leaps before, but they've always been out of the money. So I don't recommend buying in the money leaps. Okay. What another question was, what options positions would you recommend for Roku or Nvidia? So Nvidia definitely going to see some upside. So if you guys were paying attention to when I went through Nvidia, I'm just going to go share my screen one more time so you guys can kind of see this Nvidia stock. So on the 4-hour time frame on Nvidia, like I said, it was trading in a range here. So you can see Nvidia was basically just trading in this range, and it's finally broken out of that 547 resistance, which was a strong resistance on Nvidia. And now what we could potentially see is some movement on the upside. So I definitely see Nvidia first level I have is this 560 level, strong level of resistance, and then after that 565, 570, and then it could potentially hit all-time highs again. I do see Nvidia hitting all-time highs again with this EV news. If you look at Nvidia's options chain, I want to show you guys something. So look at the open interest and volume on this options chain. I'm actually going to move it to the 22nd,
Can
and
you
I'm
pull
going to
up your
show you.
screen for us, Masi?
Oh, sorry, yeah.
Thank you.
So if you see NVIDIA's options chain here, I always pay attention to the open interest and volume. And you can see that for the 22nd of January, the 600 strike has a lot of volume, bigger open interest than some of the other strikes here. What that means is that trading on that strike, there's a lot of volume, which means the trading on that strike is higher. So people are trading this strike. People have open contracts on this strike. It could show that Nvidia could potentially hit this strike. So what I like to pay attention to when a stock has catalyst behind it, or any news, I always like to pay attention to the strike prices, and at what strike prices do you see higher levels of volume compared to the other strikes. You can see 2000 as compared to some of these other strikes, which could signify that Nvidia is going to hit these. So this 560 level that I showed you guys on this chart, the 560 level is the next level of resistance, which could signify that Nvidia could potentially hit that 560 level. And you guys can see, before I wasn't showing you guys my screen, but where Nvidia was ranging, broke out of 547. It's now going to continue on an uptrend here. 560 is the next level on Nvidia. If we see a break 560, we could definitely see a lot more upside on Nvidia, especially from what I'm seeing on the options chain. Even if you move further out, you'll see exactly what I'm talking about a little bit clearer. And you can see here the 600 strike, still a lot of volume and a lot of open interest, and that's the end of January. So when you're paying attention to stocks that are starting to break out, or if they have catalysts, definitely pay attention to the options train and what you see on the volume on the specific strikes, especially those psychological whole number strike prices. You'll see a lot of volume and open interest. All right.
All right, I think that'll be good for today. Let's go ahead and wrap up and let them know what's the show about and when can they see you, Masi?
All right, guys, thank you so much for tuning in. So basically with Options Advantage, we're going to go through everything options. So you guys can catch me on here Monday, Wednesday, and Fridays at 2 p.m. Eastern time. And what we're going to go through is obviously my watch list for the day, any trade ideas that I might have, any market movers, and stocks that I'm potentially watching over the next several weeks or months. And then obviously options. So we're going to go through a lot of options strategies. We're going to go through options knowledge, what you guys can learn about options, basics of options, and then more in-depth strategies as well. So I'm really excited. This was the first episode. I hope you guys liked it. And I'm so excited to see you guys on Wednesday at 2 p.m. Don't miss it. We're going to go through a lot with you guys, and I'm super excited.
Definitely, guys. And don't forget, subscribe to Masi Trades on YouTube. You can find it in the description below. And that'll be it for Options Advantage.